Hello and welcome to your Daily 5 for the 1st of February. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands, and today I am hosting this episode of your Daily 5. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs, and of course they play a crucial part in my approach to pick 5 interesting charts for you. You can find my contributions in the RRG blog on the site, as well as on StockCharts Television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. In this week's episode of the show, I highlighted the rotation out of defensive sectors. And if you have yet to see it, please check out the replay on YouTube or any of the on-demand channels, because today I want to move to the other side of the equation and see if we can find any opportunities in the more offensive segment of the market. The first chart I want to share with you is the comparison between growth and value stocks. And we have the RRG on the left and a price chart or a ratio chart on the right. And the RRG shows you very clearly how value is on the right-hand side of the plot against growth on the left-hand side. And that means that value is still in a relative uptrend versus growth. But recently, over the last 4 or 5 weeks, you can see a rapid acceleration in favor of growth. And on the right-hand side is the longer-term chart of the ratio between growth and value, and I'm using the Dow Jones indices for that. And I've used this chart a few times in the past because I think it shows such a nice picture, especially first when the growth value rate wasn't able to push towards a new high and it was almost a perfect resistance level. And then the confirmation when we completed that massive double top formation. And you can see the percentages here. This was a 16.5% rally, and back to that support level here was a 16.7% decline. And very recently we actually almost touched that support level to the dot, and we're now bouncing. Near term, we're running into resistance offered by that old bottom here, that old low. That's very likely going to be resistance. But given the rotation that we see here and the fact that we've completed the initial target from that big double bottom, makes it very well possible to see a further bounce of growth against value, so a rotation back to growth stocks. When we move to the relative rotation graph showing the rotation for the 11 S&P sectors, and we stick with the assumption that growth is, or money is moving out of value into growth, back to growth. And we look at the, probably going to say the ultimate growth sector, which is consumer discretionary, and you'll find it here inside the lagging quadrant, but it's rising, and it's rapidly rising over the last few weeks. And I told you, people, this is the title of this show is a very aggressive shopping list. So we're going to go out on a whim here and look for opportunities inside consumer discretionary, especially when you combine it with the price chart of XLY, which is here on the right-hand side. And if you look at this chart, then what I think can be labeled as a giant wedge, and it's a falling wedge pattern, which essentially is bullish. It's a trend reversal or a trend continuation pattern. And here we're at the end of a trend, so we can label it as a trend reversal. We're already out of that wedge. We've had the first initial rally. We're running into resistance around, say, 150, but the final target, if and when this is really a wedge, and for the time being, I'm gonna label it as such, target's around 170, the top of that wedge pattern. But watch this. Here on this RRG, consumer discretionary is inside lagging. We all know why that is. That's because of Amazon and that's because of Tesla. If we trim that RRG down and we stick with XLY, but we also include the equal weight component, which is RCD. That is the equal weight consumer discretionary ETF. And you can see that it is on the complete opposite side. It's inside the leading quadrant and it's still moving further to the right. And if we bring in that individual price chart, then you can see that it's not a wedge, but we left the falling trend. We hesitated a little bit sideways. We had a very nice trading range, and we are now completing something that can be labeled as a double top, or at least coming out of a base formation, and we clearly moved beyond the upper boundary, which was around 125, and the way up is now there is quite a bit of upside potential available. And look at the relative strength, where this is gradually moving around, moving out of that downtrend, and now starting to gradually move up and push those RRG lines higher. So with the rotation out of value back to growth, and XLY turning around inside the lagging quadrant, while the equal weight counterpart is already well inside the leading quadrant, a big wedge pattern inside XLY and RCD coming out of a trading range, it's now time to look for three stocks inside that sector that have good potential. From the sector RRG in combination with the equal weight, so the XLY and RCD tails, I went to the RRG that shows all the individual stocks against XLY, so in the consumer discretionary sector. And I picked three stocks that I think are worth looking at. And the tails are here on the RRG. You can see they're all on the right-hand side. Pool is still moving further to the right, picking up relative strength while at stable momentum. CCL and APTV are losing relative momentum, but they are at really high RS ratio levels. And especially when you combine them with their price charts, I think that they could provide nice opportunities in the near term. So let's start with CCL. If we look at the weekly chart of CCL, you can see that it even went below the Corona lows in the second half of 2022. But what's happening here right now looks like an inverted head and shoulders forming, and we are waiting for a break above the neckline, which is around 11.7. So if we see CCL closing the week, let's say around 12, I think that is a very nice signal for a reversal and a new entry moment to pick up some CCL for a further move up. The second one is Pool, and you can see here that this also came out of a very long decline. It completed a double bottom pattern. We clearly moved beyond that in between high. Relative strength is improving, and Pool is on its way up, moving to probably somewhere around 425 initially. And the last one is APTV, and here you can also see, maybe even more pronounced than in CCL, an inverted head and shoulders pattern, which is on the verge of breaking. And I think that what we're looking for here is a weekly close at or beyond 115. 114 is the high of this bar here. So when that neckline is broken, the reversal in APTV is complete, and you can see more upside in this stock as well. And that concludes your Daily 5 for today. Thank you for watching, and I hope you enjoyed the presentation. Please stay safe. I'm looking forward to seeing you again very soon at one of the shows here on StockCharts Television.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.